All right, YouTube, go ahead and throw those A's in the chat if you can hear me speak. This is directly for the YouTube members. Please go ahead and throw those A's in the chat if you can hear me speak, team. I know I have a few viewers there on YouTube, so I just want to make sure that I am connecting with you properly before I include the master students on the Discord side, and you can actually take a quick look. Actually, I don't have them on that side, so it's okay, no problem. Yeah, live mic team, make sure to keep your microphones muted, and we should be good to go in just a couple minutes here. Hey, Douglas. Yeah. Send me that DM, my brother, and or if you still have that Arc University in your Discord, mention me in orientation or enroll assignments, and I'll go ahead and assign you to the track force students right away. Hey, Northwest, good to see you here. Ed Princeton, long time no see, my brother. Good to see you. Susan, hello. And Beso Amy, long time no see. Good to see you as well. Thank you so much for coming on by. Almost ready, team here. Just a quick sec. Alfredo, how you doing, buddy? Pedro, good to see you guys. Northwest got the notebook ready. Good. Hey, Devin. Okay, team. So I'm gonna go ahead and now include the master students, and we can get this thing rolling. Welcome back, master students, to week number 3 for formation analysis. And this is one of those weeks where we get to learn psychology in a sense, right? So believe it or not, in the chart, in the candlesticks that we've recently been learning, we are able to determine in groups or structures or clusters of candles certain formations that can lead price action in a certain direction. Now, know for a fact that the formation analysis here and the candle analysis as individual factors can't be really applied into the trade as the sole decision maker for your thesis or for your upside or downside a guess, right, or a bet. That's not really what this is for. The reason we have this is to further validate or invalidate your thesis. So say, for example, you have a thesis saying that, hey, you know what? It looks like we're going to be going up here based on this reversal candle, right? We have this hammer candle at the bottom of a trend, and it looks like we're about to start reversing. And then you notice actually then in a wider spectrum, right? You zoom out so that you can see that that candle, right? That reversal candle, that hammer. At the very bottom of that, it appears to be the right-hand shoulder of a formation called an inverse head and shoulders, right? So you have one V in the right, acting as an inverted shoulder. The other V is on the left-hand side, and you have a lower V, which is the head, right? So if I'm going to draw a quick little way to kind of look at that, it would be something like this here, right? Price action declines, comes up, it creates a lower peak or a lower trough, and then it comes up again, another trough, and then it continues. Now, this price action is said to continue to the upside, right? I'm giving you just a quick little something something before we actually dive into the analysis or to the lecture itself. All right. So if this is a bullish formation and you're noticing right in here that you have that reversal hammer candle right at the bottom of this trend, then you're going to notice here when you zoom out into the wider picture that you have a large formation, right? Also paired with this little hammer candle telling you that there is an upside continuation to be considered. So this is the reason why we would use the candle analysis as well as the formation analysis. So remember what I mentioned to you before. Remember what I mentioned to you in the previous weeks, that we're going to be cascading or layering, better said, the lectures starting from week 2 all the way up to week 17. We're going to be layering those one by one. So you're going to notice that every single lecture will cascade into the next. So you can see now that we're using formation analysis into something called an inverse head and shoulders, and we're using the candle to give us a continuation to the upside, right? These are not, remember, not the sole factors to tell us that the upside is going to continue or a downside, right? It's just to give us a further validation or invalidation of a current trend or a current formation. Okay, so with that said, I think we're good to move on here with the actual lecture, right? So please go ahead, team, and ask me any questions now before we actually get started with this, and then we'll move on. I will say that that I did have kind of a interesting experience with the track 3 students as I asked that, and actually that question turned out to be an entire lecture instead of the lecture itself, right? So make sure to keep those questions a little light, and we'll go ahead and move forward. So please let me know if there are any questions that you would like to ask before we move forward. Hey, Christina, good to see you here. Major Tom, good to see you as well. And Joe, US1, my brother, I know that you are probably extremely exhausted, and I appreciate you sticking by your word and sticking by your promise here, right? So I'll make sure to be there for you as much as humanly possible as well. So before we continue, let me just make sure. Jim, how you doing? Good to see you here. Before we move on too, let me know that my voice is coming through clearly. Hey, Candace, good to see you there. Douglas, I got you, my brother. I got you, dude. It is sounding good. Okay, so we do have a question here from a master student saying, when will we learn timeframes, best or most accurate timeframes for analysis? Well, in formations, this is one area that I touch on specific timeframes. You're going to also learn what timeframes are best for formation analysis and also for candles. Aiden, what's up? Tony Spock, good to see you here. Hey, Mark. Okay, so yeah, so let's go. Without any further ado, let's go ahead and move on and see what else we got in store for us, right? Okay, let me come back down here to the lecture. Right, so let's go ahead and take a look at this real quick, team. So this is going to be your Arca's golden rule of 3, right? So don't take it as me being the creator of this, right? It's just so many different people call this a golden rule of 3, but not everyone really looks at it the same way. But it really does rely, or it does lay upon how you personally backtest a golden rule of 3, and you will understand this as we move forward. But this is a very important aspect in trading that actually has some consistency. It has some consistency throughout the markets in several different formats, except for one, and you will learn that later on. Okay, so let's read this on. So the bulls, universally applied strategy to a formation theory, right? So 3 tests of the resistance. Your resistance in price action when you are, trading like this, right? Let's just say that this is your range trading. Resistance with candles will be at the top, right? Right over here. That is your resistance level. Support levels are down here, right? So you're going to range trade like this. This is your support bounce, right? You have a continuation, and this is your resistance, right? So, so 3 tests of the resistance followed by capitulation. Capitulation means that if you are let's just say that you are range trading an ascending channel, right? You have test number 1, 2, and 3 of the resistance, right? 1, 2, 3. Usually on test number 3, you have the furthest downside and a breakdown would happen. So capitulation, in other words, right? So test number 3 is usually the bearish side of things on an ascent, right? So a price inclining, getting that higher high and higher lows structure. This appears to be a bullish formation until that golden rule of 3 applies. So it does have a pretty good batting average, right? Its strike rate is up there. It's definitely high. So it's good to consider on ascending formations here that you will get a test 3 before a capitulation. Sometimes you would even get a bounce here to fake out number 4, where it appears to be reaching that number 4, right? It'll go like this and then not quite and then completely drop. So those are also very, very typical rules. Hey, Galvin, good to see you here. So let's see, our analysis of our candles, were they accurate? So I'm still waiting for a few assignments to get turned in. I will definitely take a look at everything. You will know for sure. So let's go ahead and continue on here. Thanks, Jim, for the question. And let's see. So invalidation of this is the test number 4 or 5, right? So if you move on to that 6, it's like, man, you know what? This ascending channel it probably has a chance of it breaking out to the upside instead of the downside. So when you start moving on to that 4th, 5th, 6th test, those are already kind of invalidating your golden rule of 3 for a downside play. Okay, so failure of the run can be test 6 and on. That's right. So bears, let's see, an uptrend formation can realize the golden rule of 3, which is what we just spoke about, right? So failure of the capitulation can be at 4 or the 5th test, just like we spoke of. Okay, so let's go ahead and move on here and see what else we got in store for us. Okay, so in this case, let's go ahead and study the first formation that we're going to recognize, right? So this is called a dead cat bounce. So the dead cat bounce is one of the most utilized formations in the markets. Man, this really does have it's a universal formation, and it really happens all the time. Now, please go ahead and include in your notes that formation theory, it works in every time frame, whether it be the 1 minute, 2 minute, 3 minute, 5-minute candles, 10-minute, 15-minute candles, 30-minute candles hourly. But I will say that the most effective time frames for formation theory or formation analysis are at the 8-hour and above time frames. So if you can just go ahead and include in your notes, all of you students, please include in your notes that if we have a dead cat bounce or any type of formation, we will definitely realize better in the 8-hour and up. Okay, so please know that that those are the time frames that you want to make sure to keep an eye on the best, right? So just know, team, that these are really critical rules that you should keep in mind. The lesser the time frame, the higher the failure. Okay, so if you look at these formations in anything like, for example, the 1 minute, especially the 1 minute time frame may or may not hit. You're getting into 50% zones. Okay, so in order for you to really determine if that time frame is going to work out with whatever formation you're observing, then you're probably going to have to, zoom out of your chart and look to the left and start what's called a back test. So you're going to start identifying how many times this formation has been realized over, I would say, to gain, statistically speaking, to gain a true habit would be around 140 iterations, right? So if you can reverse, or if you can back test, ideally 140 iterations, then you would know the true behavior of this particular formation in the particular asset that you're looking at in the time frame. Okay, so not every time frame will give you the same back test result, and not every ticker, right? In this case, we're looking at the NDX, which is the NASDAQ the NASDAQ ticker, right? This is not going to give you the results for, say, ticker symbol AMC or ticker symbol GTII. It won't give you the same behavior. Every single different asset, know this, okay? Every single different asset that is traded has a different characteristic and a different psychology. Not every ticker will ever be the same thing. When we build our system like we're doing now, right? We're looking at candles, then we're looking at formation theory. As we're building our system, we'll be able to attenuate, or we'll be able to tinker with a little bit of wiggle room of rules, right? So we're going to say, well, you know what? This formation here hasn't been realized more than 140 times, but it does have 60 out of 80 that it did work out. So those are pretty high probabilities, right? So now you can kind of adjust your rules base and kind of favor things in your own discretion, right? So you're going to notice, and you're going to hear me say that a lot in the coming weeks. You're going to hear discretion a great deal. Okay, so this is a dead cat bounce. It's a bearish continuation formation, and the psychology built around the dead cat bounce is greed. Okay, now the reason why it's greed is because somebody may be trading this. I know that this is the NDX, and yes, the NASDAQ. The NASDAQ index is definitely worth several thousands of dollars, right? So let's just say that this thing were $20, right, at this very top side, and this bottom here was around $10. Without any narrative or without any observation of a previous or historical bottom, somebody may just be saying, well, if this this looks great at $20, you bought it, right? But then you're losing $10. This may actually be a better bargain for you to buy at this area, when in fact it's not, right? This is going to get a sharp incline based on a sharp decline. The dead cat bounce will often experience a huge impulsive move to the downside, followed by an impulsive reversion to that top side. And oftentimes, the faster the downside, the faster the upside, and the continuation of it. Okay, so know for a fact that this has that effect, right? So a sharp decline, a sharp incline, and at some point here, the people who are missing out up in here saying, oh my goodness, I bought in up here, they're going to start out of panic, out of the psychology is this. Out of panic or out of worry, they're going to start removing profits, even if they're still an incredible amount of percentages down, right? They're going to gather whatever they could, so they're gonna ride it to the downside here, right? So you're going to get the short sellers that bet the price to the downside, start opening their positions at this upside here, and that pressure from the traders called short sellers, they're going to bet the downside here, so that's going to apply pressure to the downside. So the bulls are going to grow exhausted. The bullish people are the bulls, right? Betting the upside. The bears are betting the downside. So the bulls are going to grow exhausted at this point. The bears are going to take over at this point and then bring the asset down to lower levels. Now, this wasn't a completed dead cat bounce, because the way that you are able to play a dead cat bounce is by looking at the bottom support. Okay, now in this case, I would actually look at this point here, right? So this was matching with this wick low right here, right? It's matching with this top side and this candle here. So you want to identify the bottom side. Typically it's located right down here, right? The very last, in the very lowest point. But in this case, we weren't. This was the incorrect time frame. It wasn't the hourly time frame. We would actually experience this better in a 3-hour time frame, where we have one huge candle to the downside, or a 4-hour, right? We have 4 candles there. So we could experience a one sharp decline of a 4-hour, and then this thing would just start declining like this, right? So this is the reason why I'm averaging it here. Or I could do it there too, but it doesn't matter. You'll notice here that you'll be able to pull profits with full discretion. The way you take that, or the way you measure the price objective, I will follow up with you, team, to the chat. Just a quick sec. So the way that you take the price objective for this formation, because it does have one, right? So this is being the bottom of the dead cat, right? Now you take a trend line from the tools in your trading view platform or whatever platform you have, and you draw it right from that very top side of that wick there to the very bottom side where you identified that line. Then you take this line here, you move it. You move this line right down here. So if we can just be at a full discretion right here, it looks like it's around the same size, right? So your take profit is actually right here. So, and it happened to work out nicely, right? So it's please remember that we're not on the chart right now, so I can't actually move my line, right? Unless I could actually. Yeah, no, I don't think so. But yeah, know that that's how this formation gets measured, and that's how it's played. And oftentimes it realizes right where it's supposed to, and then it reverses, right? So let's go ahead and take a look at the chat here, right? So, más dinero con fun que con no trust, no believe is saying que estamos haciendo más dinero en fun que con finger. Oh my goodness, brother! I know DWAC and fun going up there because of Donald Trump making some noise out there, right? So now let's go ahead and take a look at some questions here. US1 saying, do the 3 tests taps also apply to only sending formation but testing the resistance line? Yes, it is a golden rule for ascending and right-angled formations. I would say symmetrical formations. So meaning that you would have a formation that's either trading in this manner here, in a consolidation, just sideways trading is what they call, right? Usually that third test applies pressure. Now, on this formation in specific, you're going to be looking at a 50-50 chance of this breaking down or up, right? But know that it would be fulfilled on the third test. Now, ascending formations, the third test, right, 1, 2, and 3, that would imply a failure of price. Now, descending formations, when you're looking at a channel, when you're looking at a channel going downwards like this, that's not, in this case, you would actually be looking at the golden rule of 3 to reverse for 1, 2, 3, and then upside, right? So it's just the inverse play on the golden rule of 3. I'm not sure if that's what you were asking, but we were going to touch down on that in just a few slides here. But just to answer the question ahead of time, that's what it really means. Now, Jim R is asking, that's a 3 crow formation on the right. Now, Jim, what ticker was I in? Was that on the previous slide? And let me take a look right there, right? So, sorry, was this one here the one that you were looking at? On this current one, right? Yeah. Actually, this one right here would actually be your 3 black crows formation, right? And this would be the continuation to the downside, bounce for recovery, and yeah. But yeah, very very good eye, my brother. Very good eye. This one too, but I really would like to see the candles more, without these huge wicks. They should be closer to, the candles should maybe consider looking like something like this candle here, right? Something like that, either downside or upside. Very little wick, mostly body. But they, the psychology would take it as it is, no matter what. It's the sheer psychology. It's the sheer belief that it is a 3 black crows or a white soldier's formation, right? That's going to lead price action towards downside or upside. It's really just based on psychological belief. Let me take a look at the continuation here. So now Aiden saying, do you ever think the market will slowly adapt to the sentiment behind formations such as these and thus make these formations work inversely in the future? Completely and utterly said and utterly spoken to you, yes, and underlined yes. The formations will not maintain consistency throughout its time. Not all of them. The dead cat bounce is a traditional formation. This has maintained consistency. But something like a descending channel, this was a bearish formation back then. It was a breakdown. It was a breakdown channel, not a a distribution to reaccumulate channel. It was not that. This was a bearish formation until the last couple years. Same thing with some triangle formations. They tend to change their behavior over some time. It really depends. It really depends on what's happening in the broader markets. For example, the addition of a great deal of new market participants that are uneducated in the markets presented the inversion of a lot of these formations in order to trick retail into thinking that the upside continuation is a higher likelihood. So, that started to play inversely to the people who are uneducated in the markets. And the way that you can know that it's the way that you are included into that memo, right? That, hey, we're going to be inverting this, is not actually a memo. The way that you do it is by continuing to observe the charts and observe price action. So once you start seeing an invalidation consistently of a certain formation that you usually traded the right way, then you're going to, start speculating on the fact that there could be an inversion here, right? And it takes, on average, a couple months to a few months for it to finally take effect. So it's not like it's an automatic shift, because you're going to start declining on the strike rate, right? It's going to have a lesser and lesser batting average as it continues to fail, because it's still going to have some successes depending on the asset that you're trading. But this is how I'm able to observe a lot of different formations being shifted around, right? So good question, Aiden. And let's see. So every candle in each time frame represents that particular time frame per candle you're viewing. Correct. So if you're here in the hourly time frame, you are observing an hourly candle. And then when you're observing this as a formation, this is an hourly cluster of candles that are presenting this dead cat bounce formation. So this is how we started in the beginning of the session, right? We were identifying individual candles in the prior week, and now we're going to identify clusters of candles to create a formation. And this is the analysis and the thesis based around their the historic and sometimes newer formations. So it's important for us to know these and identify that there could be some weakness or strength into the market as as a discretionary measure, saying that, this thing is about to fail. It looks like the bulls are getting exhausted up here. This is probably going to build a dead cat bounce. Our entry would be right around down here for a continuation to the downside at take profit so-and-so based on this trend line. And we did that today, actually. We did that today live in the Arca Bulls Trading private Discord, right? So we did that on, I think it was, correct me if I'm wrong, team. I think we did it on NVIDIA, or I forgot which one we did it on. But yeah, we got a dead cat bounce, take profit, and we nailed it, right? We bagged I think a 30% or something, but it was good. So very good question, by the way. So now Senior Pennington saying, so the entry on a dead cat would be where horizontally, right? So this would be the break right at this line here, because it's going to have a different behavior every single time. Like I said, most of the time the trend line is here, but because this is 4-hour candles cascading and this is not quite the formation, it makes me feel that this was better traded in a 4-hour time frame, where you have one sharp decline candle and then the sharp increase, right? So typically, in a discretionary form, there could be, you're moving a little bit ahead here, right? But they're moving averages, right, that are it's going to be the following week, right? There could be moving averages that are pivoted like this, right? So this could be the rejection zone, and also the top side of your dead cat bounce to support rejection from a moving average and continuation to the downside. So psychologically and also mathematically, because a moving average is based on a certain closing. Remember, team, when you close a candle, an hourly candle, when you close it, that's now an hourly close. Remember that the red candles open on top and they close at the bottom, right? So this close here closed an hourly candle. Then now the next candle will close down here. The next candle will close down here. Now, enough information of all of these candles grouped in the last 14 days, right? And let's just say, actually, you know what? In the last 5 days, let's just say hourly candles, enough to consider 5 days on closing basis, right? That will be a moving average. So you can say, for example, this is just a quick little preview to next week. Okay. So let's just say that you want to take a look at a simple moving average, a 5-day simple moving average, right? But you want to take a 5-day simple moving average, taking into consideration the time frame of hourly candles closing over the last 5 days, right? So you're going to have 5 days worth of hourly candles closing all the way, and then you're going to get your first pivot. And that's going to be the first pivot to mark off where the 5-day moving average will start. Then another 5 days will continue, and whatever price action did what it did, it's going to mark off the next point, right? So now you have the moving average moving, right? So then let's just say the price capitulated for the next 5 days on hourly candles, right? It goes all the way down here. So now it closes the next 5 days and the moving average moves to that next average, right? So that is a moving average, just in a quick little crash course. And this is what I'm saying here, that there could be a moving average that will certainly resist for this formation to find some type of resistance, and it will not continue because it's a key moving average, right? So this would be for some traders, it would be a consideration to enter short or bet against the upside here and take price action to that neckline where they would cover their position right down here and wait for the bounce, right? And then you wait for the validation, and then you enter short again at this break, and then you bet the downside again. So this is a short play. This is a bear play. And this is how you, as a bull that's betting the upside, in one way, you will know whether this thing is going to continue or not, right? So sometimes people are saying like, yeah, man, this thing just went all the way down and now it's recovering. Should I buy in? No, because you're going to notice here that this is a bear play. Then you're going to notice your candle structures, right? You're noticing over here, you're getting a little bit of a shooting star right up here, right? You're getting it towards the downside, right? You're going to notice a lot of things that are kind of opposing the continuation to the upside. Right now, if you remember volume from you know what, we're gonna be learning about volume and indicators week, which is week 5. We'll touch more on the dead cat bounce with volume, right? But let's just say, for example, your volume had a huge spike up here, right? And then every single individual candle has its own duration of a volume bar, right? So this candle here has a lower iteration of volume, right? So now this next iteration has even a lower iteration of volume, and it increases in price, thus dropping volume, right? So that's very interesting to see that volume is dropping while price is increasing. This will be another way for you to determine that there is weakness to the current trend. This is called a divergence, right? So you're going to notice that volume drops. You're going to notice that price is inclining, but there's weakness. That means that this is likely to fail. Then you match your shooting star with a moving average, resistance, dead cat bounce. You see the probabilities continue to stack here, and you're going to be able to play that counter strategy on a chess move against the person that made an opening on you. Okay, so these are ways that you can, that's right, Yuka Frita, this is definitely bearish. Right, so that is the way that you can identify a weakness to a continuation, for an upside continuation in price. Right, not everyone knows these little tricks. Not everyone observes enough, and not everyone, most importantly, believes in this. Now, whether you believe in it or not, for me personally, doesn't matter. I don't care that you believe in it. I don't care that someone else that's a professional trader or a millionaire out of trading, I don't care that he doesn't believe on it, because my perspective here is to be a mass psychologist behind my screen. I am observing greed. So this means that people are going to want to take this right here because they got the discount, but they don't realize that the bears know that this is their play. Right? So it's really not about me believing it or not. It's about the psychology within this asset, within this time frame of this particular formation. That's what the thing just, it lands on psychology. Is it believed or is it not? Well, we got the hourly time frame here. Let's start back testing how many dead cat bounces realized, right? And then we're going to notice what the probabilities will be for continuation to the downside based on an hourly time frame dead cat bounce. Right? So Christina saying, or you can be a not so mass psychologist like me. Anyway, so let me go ahead and take a look up here and continue on these quick questions, right? So the entry in a dead cat bounce would be where, right? So I gave you 2 different entries now, Senor Pennington, and oftentimes the better entry would be down here, right? So the conservative trader will open at validation here, and the aggressive trader will open at validation here, right? So it's better for you to have a lot of experience behind charting and behind observing raw price action, um, so that you can consider what that play actually does for us, right? So please, students, take note of all this, right? Because you'll be able to really determine what the psychology is behind this formation over the last. Remember, in an hourly time frame, just over the last few iterations. Honestly, 140 would do it, but team, hold on just a quick little moment. Okay, so let's see, including the microphone here. All right, so let's go ahead and continue, team. So yeah, please remember that this is a psychological formation that represents greed. So now, Jim R saying no on this current one. What about where the arc down is, right? So this area here, I know you were looking at this one, right, Jim? It is also a three black crows, but remember, it's just really the belief that it is there or not. Sometimes we'll sometimes I man, little by little, you're going to start noticing that you're not going to like uh, you're not going to like formation theory in general, right? This is a good way to observe certain price action, right? But when you start involving yourself into mathematical probabilities or statistics, you're going to see this as useless almost, right? But for discretionary trading, for day trading, and for immediate short-term time frame trading, sure, it can work. But remember, 8 hour time frame and up, great strike rate. Right now, candle analysis, individual candles, when you're observing candles on the monthly and up, you are jumping into a speculative, predictive territory. If you are under a monthly time frame, meaning that it takes 1 month to complete one candle, if you are under a monthly time frame, you are within a forecast territory. So the higher the time frame, the better the strike rate. And in the monthly and up time frames, I got to tell you, the strike rate is almost perfect. So know that, and know that. Okay, so Tony Spock saying, sorry, Arca, in class, I missed the beginning rule, the golden rule of three. Can you explain when it's a reversal versus an upside versus a downside? Right. So, yeah, we were looking at the did you get the explanation? I re-explained it here. And also, please remember, Tony, that you can always just this lecture is going to be available to you. All you got to do is just go right back into it and watch it. It's always available for you, my brother. But I will continue explaining deeper and deeper this golden rule as we go. I'm not going to finish with it just yet. It really pertains to the entire lesson. So let's see, David saying, in what hour would you recommend it most? I honestly, like today we traded it in the, I think we traded it in the 4 hour or the hourly, right? So it worked in the hourly too. I will do it in any time frame as long as it does have some validity, right? So I will, if I'm noticing it in like on a 15-minute time frame or a 5-minute time frame, I'll zoom out of the chart real fast and start looking at. I won't even draw anything. I will just go back with it with my eyeballs and see, did cat bounce do it? Did that one do it? Did that one do it? And I'll start counting. Let's see, just let me get at least 20 or 10 or something and see what it's been like over the last few weeks. And then I'll make a quick conscious decision or an educated guess. So now Jim saying just above that T formation isn't. Yeah, I got you. Now, Zenit, ascending channel is bearish now, correct? Yes, an ascending channel is a bearish formation. And Mark saying with uneducated retail gravitating towards microcaps and with less respect to candle formation and more susceptible to scare tactics, etc. Generally speaking, how less or more reliable are patterns for microcaps versus larger caps? Significantly less reliable. Now, the reason why I practice a severe amount of statistical analysis behind the small caps and micros is because I would rather backtest the algorithm, right? Whatever is the driving force of price action, be it a high frequency trading system or institutional traders themselves, I want to backtest their behavior. So the way that I do that is with, we're going to learn this in week 5 into week 6 and 8, 6, 7, and 8, and I believe week 10. We're going to understand what the system, the footprint model is, or a forecast plus, and that would be testing the certain criteria of volatility on linear versus stochastic momentum, and that will give us results over the behavioral tactics behind retail and algorithm grouped together over a certain time frame throughout its entire trading history, like usually on a higher time frame, like a bi-daily, daily, maybe even a 8-hour and 12-hour too, but usually on a daily, bi-daily, 3-day, and becomes less often on a 5-day. But yeah, that's kind of the sweet spot within that area there for determining what the higher probabilities for price action will be. So I will say that statistics have reign over the formation analysis, because please remember that formation is based on psychological belief. That's it. It's only reliant on psychology. Now there is only one formation, and you're going to see which one it is that has mathematical properties. Literally one. Okay, so let's go ahead and now move on to the next slide, team, and see what else we have in store for us. Right. So here is the dead cat bounce properties. I'm not going to go over this. Right. This is for you to read and for you to understand how to execute this type of formation. I actually have this for your study and not for practice just yet. I would love for my master students to remain cash and observe the live trades with me. If you do feel that you have enough conviction over my talent, go ahead and subscribe to my, to our Arcables trading team, and you will see this execute live in person, right? So just to give you a quick little update, over the last 2 days, being Friday and today, I've executed 16 total trades, and I have realized 3 losses, and those 3 losses were equivalent to it was equivalent to 2 figures. So like, let's just say that it was under $50, and it was a it was a larger gain on dollar value. So this I'm very happy that we were able to observe this and also practice it live. So this is it is critical for you to kind of remain cash and maybe don't consider trading it just yet until you're really familiar with the iterations, right? So observing really will be the best bet for a new trader. Okay, so yeah, so these are your properties here. These are for your notes, and consider making a booklet, right, of things that will be the most important things to you, right, and then you'll continue modifying it as you move forward. So now let's see. Pedro is saying, would the volume color, would that help too? Yes, absolutely. Right. So when you're observing volume, there is usually a moving average that kind of plays along this volume as well, right? So let's just say that that moving average within volume, you have volume bars starting to decrease under this, right? So let's just say now you are starting to get volume here peaking outside of that moving average, right? So you're getting these spike ups on green bars. That means that you're getting green, or you're getting a bullish volume, and it's considering or taking into account a continuation to the upside. Now, if you're getting red volume bars right above that moving average, this is usually it's said to be unusual volume for bear pressure. So yes, it does matter, and it does matter where it is in relation to that moving average as well. But we will continue learning the volume indicator into indicators week, which will be week number 5. Okay, we're on week number 3 right now. So this is the dead cat bounce properties. Please remember to take that into account. And let's go ahead and take a look at the next formation here, team. This formation is known to be bearish formation. So just real quick before we continue, US1 was asking, what time frame did you see today on NVIDIA? I believe I was using the 1 hour, 4 hour, daily, and 5 minutes. So the 5 minute and the hour and the hourly played crucial to the to our guess, to the play, right? So using some critical moving averages that are very important for us to observe the crossing over, right? Meaning that a price action crossed above or under, which, by the way, you will know in week number 5 which moving averages those are. That was the key. That was the key into putting our educated bet or guess into the price direction. So now, Christina saying, or let's see, psychologist. Yes, I remember reading that. So now let's go ahead and take a look at this. And this is a bearish formation. This is a head and shoulders formation. Okay, so you have a trough here that is led by a higher trough that is led by a lower trough, right? So you have 2 lower troughs followed by a middle one that's higher. Okay, a head and shoulders formation. You have your head, left shoulder, and right shoulder. When this formation appears, this is typically a very bearish formation. Now, this has so many hourly candles within it, and in an hourly time frame, right? This is honestly, this could be even seen on a 3 hour or 4 hour. So now remember, as we increase the time frames, and you could still see the visibility of this formation, even in higher time frames, the higher the strike rate, right? So you'll be able to really kind of take a deeper consideration for this formation as with the higher time frames. Okay, so there is no percentage from this point to this point or this point to this point to consider, as long as visually you can see, because remember, psychology, this is not math. As long as you can visually, in your discretion, see that there is a higher trough in the middle than the left ones, which, by the way, the left one, the right one could be higher than the left, and the left could be higher than the right. It doesn't matter. As long as you have the middle trough on top with the 2 lower sides, that would generally be considered a head and shoulders formation. And this, I will tell you that this one does get realized more often than a lot of other formations, like the cup and handle formation. That doesn't have too great of a hit rate, right? So this formation does. Okay, so this is a bearish formation signaling weakness to the current uptrend, right? Psychologically backed. The way that you can take your psychological take profit. Remember that not every one of these formations will have a psychological price objective. Not all of them will, but I'm displaying to you some that do. Okay, so this trend line here that you see is actually taken from the top side of the head to the neckline right down here. So you got to go right in the center from the very highest point of the formation all the way to the lowest point of the neckline. Now, why did I choose a neckline that's descending? Well, that's because every single wick, right, is actually leading on a regression. So this is a complete regression here. You can see that all these wicks are favoring that downside, and they all link very nicely to each other. right? So this is the honest reason. Here's a potential other one right there, but it would slightly surpass it, right? So this is the reason why I chose, a kind of a descending regression here, right? So that's why I made that happen, and this is why we know the point of which to consider a take profit for this formation. So now you can see here that the take profit was realized at one point. And the way that you can tell that it was that take profit was that we came back up and resisted three consecutive hourly candles right at that take profit, right? So that's how you get your price objective for this. And so let's go ahead and take a look at the trading properties for this formation, right? So this is these are the head and shoulders properties here for trading. Remember, you can go ahead and take a screenshot of this. These are for your notes. This is for your collection, and this is how to trade it, right? So please remember, I am not implying for you to execute based on these notes whatsoever. Okay, now, basically, I'm saying I've lost a lot. I've lost a lot entering on a dead cat, and I hear that. I hear that. So if it's not traded properly, and if it doesn't have a good strike rate within that particular time frame of that particular asset, right? So then you may have a kind of a failure here, right? So now, basically, me asking a question. Discord says can't join the trading community. So that is because you're doing it on a mobile device. So please consider hitting that link maybe on a PC so that you can subscribe to the trading team, right? So I am accepting maybe one or two more master students for the rest of this 17-week master's course. Okay, so that's a different thing. This mentorship program is apart from the trading team on the Discord daily. So this is once a week. For the 17-week mentorship, right? This is going to be with assignments, drills, a final exam, and you get to meet with me and have more access than really anyone else. So ArcMastersCourse at Gmail, I will type it out here for you. So if you do feel compelled, or if you feel compelled to reach out to me, go ahead and do so to that email in the chat or YouTube, right? And I will reach out to you with a disclaimer and with the syllabus. But please remember that I am potentially accepting maybe two more master students for this, right? I was accepting three, but one just came in, literally. And please let me know. Now, team, let me just take a quick sip of water here. I'm getting very raspy and parched. Just a quick moment. Sorry about that. Okay. All right. So, yeah, team. So go ahead and reach out to me there. Disc. Right now I have the mics muted for Discord into YouTube. So I was wondering, why is no one laughing at that, at that little soundboard? So it's because they're muted. They can't hear you guys. So basically I'm saying, okay, I'll get it. I'll join on the PC. Yes, and then everything, basically, I mean, after you join, then everything will be accessible to you through the phone, right? It's just the subscription. It's just the subscription process that kind of makes things a little bit of a weird thing, right? So yeah, consider subscribing through a PC first, and I think some people have done it through maybe an iPad Pro or something like that, where it tells you that there is a different price. It looks like Apple is they're applying like their own like premium on top of mine. So if you want to get the $9.99 deal, I would use a PC or a Windows based platform tablet or something, right? So just know that Apple will show you my Discord at $13.49, like on some huge lie, right? So, all right, team. So please be very, very careful. And guys, so I will actually I want to show you guys something without actually being too. Let me see if I can get. Let me see if I can get a screenshot of this instead, because this is what we're looking on YouTube, right? So I'm gonna go ahead and upload this so that you can see what's going on here, what I'm looking at, right? So for YouTube, I will show you directly in a video, but for the Discord, I will show you with an upload on the image, right? So go ahead and take a look at this, because I didn't realize it, and I mean I got chills taking a look at this image, right? So go ahead and take a look at that. And now, YouTube, I'm going to go ahead and pull up that image here for you to view it too, as it is an incredible feat, right? So I honestly can't believe it myself, and it's really something. But my goodness. So here is the image, and yeah, let me just kind of zoom in here and show you on that side, right? So let me pull it up here for. Let's see. Let me get rid of this thing right here, and it doesn't show it like that, so I'll drag it in there. No problem. Take a look, YouTube. Please let me know that you can see that. Wow. That is really something, man. I had no idea that we could actually reach those kinds of views, right? So that's really something else, man. So you're seeing now Arca Bulls reach 1 million views, which really doesn't even sound realistic, right? So it's an incredible thing. So now, Michael Anthony, yes, I am still going to be we're going to do a market prep after this live, Cryptic and I. So yeah, team, thank you for my goodness, man. I got a little bit of a rush kind of observing that, but thank you guys, really appreciate you so much. And now let's go ahead and continue, team. Beyond this, half of those are options watching the videos on loop. Nice. Thank you, Besso Amy. I really appreciate you. Now I'm wondering why we have a complete disconnect over the good evening, Arca. I'm getting a disconnect between the chat in YouTube and the chat in my analytics here. I'm sorry. I want to make sure that I am kind of keeping up here. Really interesting. Okay, anyway, so let's go ahead and make this. Let's go ahead and make this thing continue, right? So you broke his Mr. Beast feeling. Oh my goodness, this yeah, for real. Like I was like, oh man, So they're not actually. I'm just kidding, team. So here we go with the next formation, right? And this is going to be your inverse head and shoulders formation. So this is quite the opposite of what we were observing, right, from the head and shoulders. So this is the inverted version of that. Let me just make sure that we're streaming. Okay, good. This is the inverted version of that formation itself, right? So now, just like the other formation where we take the trend line from the, let's see, from the top side of the trough, right, all the way to the middle, you would do that same type of thing to the inverse side of things, right over here. So you would take that trend line, right, this massive trend line here from the very bottom side, that head, right, all the way to the neckline. Now, again, I ended up choosing this regression on an angle because the wicks are in an angle, right? So, and I notice a perfect touch. Not always will you be able to see this as obvious as it is here, but you will have to practice your discretion in seeing how that does fit. And an important note, a very important, very, very, very important note: never force a formation. And I can't stress that to you more. Never never force what a formation looks like. Your eyes are going to naturally gravitate towards seeing these formations printed in price. Why is that? Because we're built that way. Because our psychology will take us to that point. We are meant to observe, for example, this, when you look at a car's face, the front of a car, some people notice it like a face. Some people notice the mouth, the eyes. Does it look aggressive? Does it look mean? You say that all the time. Oh, that looks mean, right? Oh man, that looks awesome right in the front with a sports car. And then you don't say that mean look when you're observing like a classy car, right? A Bentley Flying Spur or a Rolls Royce Ghost or something. You won't say that mean, right? You'll say that, wow, this is a beautiful car. So we observe things. We naturally put a face into things, right? You'll do it when you're observing the skies, and you'll look at the cloud formations and be like, I see a turtle, or I see a dinosaur up there. Our psychology forces us to see things that are not actually there because we have an imagination. We have a correlation to things that we've used in our past, that we've read, that we've viewed, that we've studied. In this case, we're studying formation theory. So your eyes and your psychology I'm telling you that they are going to want to force the formation, but it is imperative that you draw the formation only when it's dead obvious. And that is your discretion to follow through with. Only when the formation is dead obvious will you respect the formation and consider a back test or something. Okay? I will catch up with the video, Arca. Good night, class. Okay, yes, take care, y'all. Be safe, my brother. Please let me know if you have any questions, and we'll get you caught up. There is an assignment and drill for this too. Please refer to the end of the video when you are back. Have a safe day and a good night. So yeah, team. Know that your psychology, your individual persona, right, your character, whatever you want to call it, it will want to add formation into something. So because let's just say, God forbid that you're looking at this formation here for the potential upside, but your average is somewhere up here. You bought up here and it's all the way down there. Your eyes are for sure going to deceive you because you're in a loss, because you're going to want to find the upside no matter what. Do not do that. Do not do that. You got to practice the data as raw as it is. If it's not there, it is not there. If it is there, it's got to be dead obvious. Please remember those notes, team. I can't tell you how important that is because I hear it all the time. And I promise you, every trader talks about this. Never to force a formation. Never force the play. Never. Okay? So you take that trend line right from the top side of that, this is the neckline here, right? So you have the neckline up there, and then you take it all the way back down to that center of the head, right? All the way to the lowest point. So now let's just say that the lowest point was actually over here on this candle, right? That is your lowest point, despite the fact that you are in the middle here, okay? Or this candle here, this one right here had a wick that came all the way down here. Then so be it. You go from the middle all the way to the lowest point, and then you apply it to the middle of your right hand shoulder. That is your default here. Here's a quick trick. What if this didn't move up? What if it failed? What if it came back down? Well, the inverse side of this price objective is also applied here. So you would take this trend line, one that you drew from here to here, right? And you would apply it to the top or the very bottom of your right hand shoulder, and that will give you your bottom side target. Right? Now also, for the head and shoulders formation, that is true as well. If this didn't fail here and it started to bounce and it started to invalidate the bear thesis, you take your trend line, right? Your price objective, your implied price, and you apply it to the top of your right hand shoulder, and it'll give you your target. Now, the reason they would reject is not by, it's actually sure. David, that's a great question. Would it be a moving average? Yeah. Would it be a gap? Sure. Would it be that Jerome Powell said that we're not going to lift any rates anymore? Sure. Price action reverses. It can be anything, but we have to be observant of what those factors can be. Meaning that if we're trading this formation here on a Fed day, and you're already gambling, right? We don't trade the Fed day. We don't trade during that speech. We don't trade during during the release of the CPI read, your consumer price index. We don't trade during the release of the core CPI. We don't trade during the release of the producer price index. Know that these factors can move the markets. So you wait. This will be an executions week, in starting a week number, I think 11 or 12. We're going to know how to execute based on those catalysts. You don't trade the catalyst. You trade the reaction to the catalyst. Okay? So, let's see. Where would be a good put a call entry in the head and shoulders if it's obvious, like you said. The break of the bottom and the validation of it. So if you break, right, you got to look at this in more of a shorter time frame. You're going to want to see if a moving average is critically breaking down here on the 5-minute time frame. You will learn this in week 12. So that would be at the break and validation of resistance. So this is the conversion of support into resistance with confirmation. Then you open short for that downside, or you open long put. Okay, but know that there's obviously just an infinite amount of variables into that execution. So this inverse doesn't have a break of the neckline. It actually gapped up. So would entry be at last touch of the neckline? The inverse one, right? So let's go back to the inverse here and take a look here. So this was what you're not noticing here is the news event that came out right down here. Right? So there was a catalyst, right? This was arguably one of the times that Fed Powell said that maybe we are going to consider pausing rate hikes here. And then as soon as he said that, price gapped up. So the gap up would be us finding guidance first. 5-minute time frame, just like always, right? And we go back to see what break of a historical price have we done based on a moving average and based on prior historical price action. As soon as we get the confirmation for a continuation to the upside, we wait for the pullback, enter the pullback long, and take advantage of the continuation to the upside until we see the take profit or the resistance level right up here, right? You can see all these candles stopped up there of historical price action. So this is confluent to a lot of things, and it did happen right at the money. So the play worked out really nicely. So Christina saying we talked about this in the trading psychology space yesterday. That is absolutely right. So please make sure to refer to Dr. Christina Stai's Twitter account, right? So she's actually hosting these space calls for psychology and stuff. So this is an incredible thing for retail. And it was actually Josh who hosted it. So go ahead and visit Josh Stai, his Twitter space, and you will see the recording there. And I speak in depth about the trading psychology. So in fact, I really encourage you to go look at it. I also posted the reminder for people to join me with the link to that space. So if you go into my profile in Twitter, you will note, or Twitter X, right? Sorry. You will notice that I posted the reminder. That reminder is the recording. So go ahead and click on that and hear me speak on the trading psychology. Oh, thank you, Christina. You guys were incredible too. It was tough answering some of those questions, right? Because there is bias and there is a personal touch to everything. So how do we speak on it in the broader term was the real challenge. So now. So David, I hope that I did answer that correctly, right? So options is saying head and shoulders pattern is a success rate of what? 81% around, I think, or is it lower? I know it all depends on your time frame, but on average, I believe it's close. Yeah, I honestly personally think that it has around a 71 to 74% hit rate. And that's enough, man. That's a great, it's a great average. right? So let's see. So even if it's obvious, it's best not to trade those days. If you're a beginner trader, yes. If you're a beginner trader, do not trade those days whatsoever. Stay cash. Observe what price action does. Right. If you are starting to become more of an intermediate to to a more advanced trader, then you would be able to follow through along with me on those trades based on guidance and reaction, psychologically speaking. Right, because we will use the psychological reaction alongside the psychological resistance on pairing with geometric tops, right, and historical price action, and also there's a lot of metrics that we can take into consideration, but it's the combination and layer of several factors that primarily rely on psychology. And Polo M, thank you so much, my brother. I If you're part of the Discord, I can actually if you're part of the Discord, and I can actually give you a month, for the Arca Bulls trading team. That's such a kind donation, my friend. So please go ahead and mention me in the Arca Lounge in Discord, right? Say at Arca, right? And I'll go ahead and give you a month, right? But I would really consider putting that in the it's hard for me to take track of this right here in YouTube. I would really, really appreciate it if you just did it in the in the Arca Bulls Discord. But Polo, yes, please go ahead and consider sending me a little mention in the lounge, and I will give you access. So now, let's see. Oh, thank you, David. Thank you so much. I'm really happy that I did answer that. So Jim is saying sorry, but tell me again. Uh, how do we draw the top and bottom of the line to know where the top is going to be? Oh yeah, so it's always in the center of the head, right in the middle of the head, and wherever you draw your neckline, you notice here that I'm actually seeing the wicks. They're very consistent, right? They're very consistent with that. Where is it? Hold on, let me see if I can do this right here. See how the wicks are regressing upward. So those wicks are really telling us that that's the neckline, right? So the neckline would be the neckline would be there. So you take the trend line from here all the way to the very bottom side, right where the head is located at its lowest point, in the middle of the head. So you take that trend line and then you apply it to the center of the right hand shoulder, be it the inverse or the regular variation or version of this formation, right? Being the head and shoulders, it will always land into that. It will always land into that middle point to the very bottom side where your neckline is, and applied to the right shoulder at the middle, up or down. So Christina's saying that zoom in was super helpful. It's really hard to see otherwise. Sorry about that, team. So yeah, I'm gonna go ahead and try to do that whenever it is critical. David saying, let's see, sorry, inverse head and shoulder on asking my wife to make banana splitting on the 1 hour. Don't go all in that. It's gonna happen. So David saying, what tool would you use in TradingView for that? So we will dive into that when we do get into TradingView. But yes, trend line. So Christina saying the wicks especially are hard to see. Yeah, especially with a dark background too, I'm sure. Zen is saying, what would it mean if there were an inverse head and shoulders, but the trend line was descending? An inverse head and shoulders it just means that you have a descending regression, and that's okay. It's still the formation, and as long as it's dead obvious that the formation is there based on the head versus the shoulders, then it's there. I've also done descending trend lines too. And I've also done horizontal, perfectly horizontal ones as well. All of those variations are often looked at, right? So let's go ahead and now move on to the properties of how to trade that head and shoulders formation, right? So here we go. So you can go ahead and take a screenshot of this, right? And consider saving it into your trading notes. Where is it? There we go. Polo, yeah, not a problem, my brother. I will I will make sure that you are good to go. So let me take a look right back here and take a look. There you are. Okay, so let me just go ahead and assign that to you right now, and so that I don't forget. Right. So I very much appreciate you for doing that, and I will add you into the list here. What the heck is going on? So there we go, and please let me know that you have gained access to the rest uh, to the rest of the Discord, right? Thank you so much, by the way, again. And let me go ahead and come back here to the master students and continue the lecture. Okay. So now know that Polo, this is where I am with the master students. It's a private Discord elsewhere, not it's in a remote location, right? It's not part of the Arca Bulls trading team. The Arca Bulls trading team is just for the trading with me every day, live at market before market open, really. So let's move on, team. Now that you got your notes down there, let's take a look at a double top, right? So oftentimes, I will say that sure, this can be valid in a 1 minute formation, in a 5 minute time frame, sorry, or a 10 minute, 15 minute, 30 minute, an hour. That's all good. But the true double top and double bottoms, meaning where price tends to have this I'm sorry. Let me just go back in here and do where was it? What was that shortcut? Are you joking? Hold on just a sec, team. I think it may have been shift was left and right, alt was up and down, control. Right. So you see this top side here, right? And the wick right over here. You have that top side to top side that usually marks off a double top formation. Right? That's usually where the bears are going to want to open their position for a downside. Right? So I will say that the true formation for a double top is actually better seen on a daily chart with a week with weeks of in between price action. So really, you could also observe the weekly time frame and then see like 1 month here, like being January, and then you have like May over here. Those are true double top formations, which is why a lot of times in the smaller time frames, this has a terrible hit rate. So people are saying we got a double bottom, right? We got a double bottom. We're gonna go to the moon now, and the thing doesn't go to the moon. Well, that's because that double bottom formation has a terrible hit rate in the shorter time frames, right? So now the double top formation, it is a bearish form. Oh my goodness, right here, I'm jittering. It is a bearish formation signaling a downtrend is incoming. It's best if used in the high time frames, okay? But please remember, the majority of these formations will be able to be used in the shorter time frames as well. But they, like always, right? They will have a better hit rate in the 8 hour or above double tops, specifically daily or weekly time frame. This is your property. These are your properties here, so consider taking that screenshot too. Know for a fact that the master students, you will also have this PDF for yourself, right? It is gonna be available to you in the weekly schedule under week 3 formations. I will mention you, and you will be able to download this PDF, the PDF presentation. Okay. So let's see. So just to double check, the center of the head is added to the right shoulder to determine the top or the bottom. Yes, that's correct, Jim. So now, correct from the center. Yeah, you got Jim. Okay, thank you so much, Senior Pennington. Christina saying, "LOL, that sounds like all the threads I see in Weeble going to the moon, right? With a little rocket emoji and everything, man. Where did you?" So, that's a really terrible. I share this all the time with my team, right? But it's a really terrible comparison, right? Because you definitely could consider, your Earth here, right? And then we like, where are you on the axis, right? Because moon could be over here. So you're saying we're going to go to the moon, right? And you're actually just doing this in reality, right? So you definitely went to the moon, right? So, we have to be careful how we play that moonshot, right? So, we don't want to, and then, yeah. So be careful how you trade it, team, okay? Don't ever say you're going to the moon. All right, you'll regret it. We don't trade based on the we're going to the moon thesis, right? Okay. Oh, just a moment, team. I gotta put a thing under my door because my son will run in here and start pressing every button. Hold on, just literally around 30 seconds. Just a moment, team. All right, we're back. So, and then you're gonna tell me, no, I didn't mean our moon. I meant Europa like Saturn's moon, right? And that's actually down here. So not it's no longer a 40% loss. Now it's a 94% loss, right? Anyway, I'm done with that. Okay, so so let's go ahead and continue the analysis here, right? So this is a double bottom, quite the inverse of the very famous double top, right? So we share a laugh here because uh, there was an influencer that used to call this George W, right? So he had a double bottom formation here for a continuation to the upside. I will tell you that this generally, you know what, I'm just going to tell you right now, don't use any psychological price objective or implied price. Don't use it, okay? Because this is not a strong enough formation for continuation. Okay, sometimes you will get an enormous amount of invalidation on this, especially in the shorter time frames. Okay, so but yeah, please remember that this is best observed if you were using the daily time frame in a really wide scope. So otherwise, the weekly time frame, right? Which is traditionally said to be practiced there anyway, per the playbook rules. Okay, so let's go ahead and take a look at the. Oh my goodness, I hate it that my extra button is not working. Here we go. So the double bottom properties here, team. Go ahead and take a screenshot of this, but please remember that you will have this formation. I'm sorry, this PDF presentation as well. I really am saying to take a screenshot for the users in YouTube that may or may not consider joining the ArcMasters course, right? So otherwise, go ahead and take this into deep consideration. So Tony is saying, so double tops or bottoms, use the daily chart or weekly. I also heard the 8 hour. So no, not the 8 hour chart is for every other formation. The double bottom is best looked at or observed through the daily and the weekly chart, zoomed out in a really macro level, right? So that's traditional for the double top and double bottom formations. A lot of people look at them in a 5 minute or a 1 minute, right? So it's just, it is there, sure, it may work out. You just have to back test it, right? You have to back test the 1 minute time frame of that asset, of that formation, and see if it works out. Right? Otherwise, it's just going to be a gamble. It's going to be a 50% chance that it goes or it doesn't. But then when you backtest it, you're probably going to notice that it's actually a 70% chance of failure. So you don't want to trade the upside on a double bottom or double top when it has a terrible backtest. Christina is saying, oops, a PCSA. Devin, will this video be available to rewatch after tonight's lecture or only available with via PDF? No, this PDF and the video will be available to you. And also know that eventually I will start giving you access to tracks number 3, 2, and 1, so you can see the different variations of my lectures, right? Because I'm human. I'm gonna omit things and I'm gonna add things naturally, right? So I'm really this isn't scripted. So I'm really going off of a whim here and speaking to you directly from what I practice daily. Okay, team. So that is a double bottom note here. You got it, my brother. No problem. So US1 saying George W, right? That really excites you on your trades. George W. That was actually Cryptic that was screaming that today. He kept on screaming George W. I'm like, oh my goodness, man. So a huge tribute to Trace Trades there, right? So so this is the descending channel, team. And as you can see here, this the golden rule of three. This is where we're gonna dive in a little deeper into the golden rule. Okay, so it's gonna apply slightly different than the way the ascending version of this applies. Okay, so the golden rule of three on a downside, it is not where the formation starts. No, not here. It is the first resistance. Okay, now a general rule of thumb here. And can I actually, how does one switch the color here? Because that is obnoxiously dark. All right, so let's just go ahead and make this thicker boy here, right? There you go. Nice. Wow, maybe not so much, right? Around here. All right, so yeah, this is not your first test. Not there, not there, okay? It's going to be your first test of the resistance right here. Now, your general rule of thumb on any formation, and I mean that, any formation, to validate that you're within that trend of the particular formation, you need at least 2 touches of your support level to validate that trend. Okay, so that is the way you can. That is the way that you can potentially, guess that you're within the formation itself. Just those 2 tests. Okay, now the golden rule of 3. You have 3 tests of your resistance, followed by a capitulation. The biggest capitulation is usually seen on 2 or 3, usually on the third being the largest one. Right? So your third test of the resistance being your top side, right? That is followed by the biggest capitulation event. So what I'm saying here is that I don't want you to come up to me and say we need to create a Twitter X Spaces group right now because the criminals are taking my money. We are down 50% from where we bought. You know, predatory shorts and naked synthetic shares. Right? And Gary Gensler and Ken Griffin. Okay, screw them. No, don't tell me that. Right? We are practicing here how the psychology behaves. I want you to know that there is a method to the madness, okay? Now, whether they are naked shorting or whatever, sure, it may be it, right? I'm not saying they're not. I'm telling you that if they're going to do whatever, and if the asset is subject to that type of predatory price action, it's going to be on test number 3. All right, so get out of the market, right? Do not enter here because retail has a tendency of buying into strength. And while that normally is a good practice, you actually have to do it with knowing where you are in the price action, though, right? So in my case, I would be down here with the Arca Bulls trading team, right? I'm down here. I'm telling everybody. All right, so I'm looking at these options contracts, or I'm looking at these shares, right? So let's go ahead and get that trigger ready. Upon the validation of support and the first clean candle above the support, that introduces the first candle to pull back to its opening or bottom range before a continuation to the upside. You don't have to make a note on this because that's part of executions week. Okay? So we're loading the upside right here, right? We loaded right down here at that discount. We got that. Bam. We got the entry here. Now we're trading, right? At this point, if I'm trading shares, I am not pulling out any profits. In fact, I will be reloading to make my cost basis higher because I'm going to increase my risk based on the strength presented. So I will increase my risk somewhere around here, maybe up here, have this thing support bottom and continue to the upside based on geometrics or historical price action. I will remove 30% position here. I will remove another percentage here and try to get out somewhere around here. But sometimes I will have several entries and maybe 2, maybe 3 exits. Sometimes I feel a little greedy here and I just take the 1 exit. Whether it continues to the upside or not, I don't care. The point is here is that I'm maintaining consistent and maintaining a green trade on the day. And I'm not talking about a 1% or 2%. I'm speaking of like a really an 15% to a maybe 180% gainer. I'm not speaking of tiny little, little increments. The Arca Bulls trading team will tell you themselves, right? Today I ended up I ended up 31% on the positive. I know some of the team landed at 60+%. On Friday, I think I ended up at 112%. Some of the team were up 200. Some of the team were at 50, 40, right? So just, there is a method to this madness. Okay, team. So remember this. The rule of thumb here is that 2 tests of your support will give you the validation of a trend. Now, the golden rule of 3, remember, test 1, test 2, test 3. Those 2 tests are notorious for short selling. Okay? Test number 3 will happen. Usually test number 3 will give you the biggest capitulation, followed by a true test of your number 4. Okay? True test number 4 will sometimes break out and continue, but it usually is test number 4 or test number 5. And that is the complete analysis behind the golden rule of 3. Okay? Your test number 4 or 5 are the most likely to have a breakout happen from this formation. Now, how do you take the target? So there is a price objective here. Take a trend line from wherever, right? From wherever the top side of your channel is to the bottom side of the channel. Take that trend line, apply it to the first candle that closes clean without any exposure to the channel or the inside, to the top of the channel or the inside. This is your first candle here. So this is where you take this massive trend line and you apply it to this candle here, to this one, not this one, this one, because that is the first candle to close without any exposure to the resistance level or the inside of the channel. Critically important. You apply that trend line here, and then you will get your price objective from this descending channel, which honestly looks like it did reach it. Right? So that's how you play a descending channel. Okay? Temporary bearish formation because it's creating lower highs, right? So these are your highs. Every single time price action goes up like this, that is a high. Right? Every single time price action goes back up, another high. But for some reason this high is lower than this one. So that's why it's called lower highs. Right? And this is why this is a low here, peak, right? It goes up and then another low. So this is called a lower low because it's lower than the previous low. Okay? Know that language, know it, speak it, breathe it, because you will have to say that so many times in your trading career. You will have to know when you're making a series of higher highs, higher lows, when you're making a series of lower highs, lower lows, when you are expanding in a bullhorn, creating higher highs and lower lows, right? So there's so many different ways to observe this. So let's go ahead and take the properties down for this formation here. This is going to be it right here. We have to go ahead and we have to kind of speed up the process here a little bit, team. We're within that time frame now. So that is how to trade that, team. Okay, so I hope that you did take that profit. Now, here's your descending broadening wedge, team. A descending broadening wedge also respects the golden rule of 3, just like the channel. Okay, your take profit for this formation is the genesis of the formation itself. Okay, so that is how you trade that. Wherever the formation starts is where that take profit is. Okay, just like the golden rule of 3, 1, 2, 3, you have a huge capitulation all the way down there, right? And then you have that reaccumulation all the way up to your take profit. It's a perfect execution. And believe me when I say, I have traded this formation throughout the last 18 months, maybe 50 plus times with success. AMC, CEOS, MMAT, the SPY, NVIDIA, Meta, AMD, all of them. They all have succeeded pretty well. This is one of the formations that have some of the highest hit rates that I've ever experienced. I think, honestly, a good 85 to 90% of the time will this formation realize, and they're usually found in the 4 hour to 3 day time frame, sometimes in the 5 and the weekly. But they're very versatile. Okay, this is how to trade it. Okay, take that screenshot there, YouTube, and we shall be good to go. But how did you recognize the descending channel at the points you just made buys? Well, that is actually going to be learned when we start charting, right? So that is the key there. That is the eyeball. So I will teach you how to identify that when we start charting. So yes, it really is based on your discretion, in your imagination, just like the way that you identify a face, like we spoke of, right? So here we're looking at, team, a right-angled broadening wedge. Now, know that the right-angled broadening wedge does have a potential to trade the upside or the downside. This is symmetrical, right? So it does have the probabilities for an upside or downside play. Now, how you play this is, so this was the breakdown candle right here, this one right here. So that means that you would take a trend line from this area here to the top side and apply it to that breakdown zone. And that will give you the take profit target. And you can see here clearly that it happened very nicely. And then we used it as support. And then we bounced. Right? And then we used it as resistance. And then we dropped. So everything kind of surrounded the take profit for this. Right? So this would be honestly best traded at the breakdown or breakout. Otherwise, it would be a trend trading based on expanding price. This usually, and the descending version of this, the right angle this, and the ascending version of this are giving us the psychology of anxiety. This is particular to anxiety in the trade. And it's widely known as that too. Okay, so let's see. Let's go ahead and continue here to the next. And this is the notes here on a right-angled broadening wedge, right? So go ahead and take a screenshot of that, team, and let's go ahead and move forward as soon as possible, right? There we go. So now this is AMC right here, team, with an ascending broadening wedge. Can't tell you how many enemies I made right down here saying that this is preparing a very bearish formation and is likely to start capitulating. So as you can see here, golden rule of three again. 1, 2, 3, capitulate. Ascending, broadening wedge, just like an ascending channel, will have the same rules applied. If it starts going into test number 4 and it breaks that 4 regression, invalidation, especially into test number 5 and 6, just like we talked about earlier. Right? So that usually happens. You get that breakdown at test number 3, right? Sometimes you will bounce here for an upside validation, but in this case, we failed it all the way down here, validated the resistance, and came down to $6.84. I had this plot here at $6.84 from here. And people were like, you're a shill. You don't know what you're talking about. I'm like, dude, I'm long this. You think I want to say that? My goodness. Anyway, yes, anxiety again and a bearish formation. Take profit at the genesis of the formation. Ascending, downside target. Descending, upside target. Symmetrical, up or downside target. Okay, those are the 3 variations to that wedge. Go ahead and take your screenshot right over here, team. So let's go ahead and now move on here so that we can go ahead and kind of scooch on this, right? Scooch on by. So this is your ascending. This is your rising wedge, right? Pay attention to these. This is very careful. This is very curious. Okay. CoinFox, I actually am streaming on Discord, but not on the Arca Bulls Discord. I'm actually in the private Arc University Discord for my master students, and I'm streaming the last free stream here for the YouTube viewers. Okay, so your rising wedge presents a downside. Okay, so now this has this can be looked at 3 potential targets. Okay, please pay attention to your triangle family. Your first target can be observed from the breakdown candle, right over here. This is a trend line that you can apply from this point to right about here, right? And of course, usually it does realize. Your second target would be at the center of the triangle. Take a trend line from that center to that bottom side of the center and apply it to the bottom side. You can see right over here that if we zoom in, you can see that this wick here from this red candle realized right at that center line. This is this line right here. That's the center right here. And it realized it perfectly. Now, this line here, this longer line, is the back of the triangle. So right about here, in a discretionary manner, when it looks like it reaches. This target also met very nice. Right? So that is your rising wedge. A rising wedge, whether it's at the top of a formation, right at the top of price, or when experiencing a downside, and then you draw your wedge with a downside in price, that is also bearish. Okay, this is a bearish formation. It is not a continuation formation. Well, actually, yes, it would technically be a continuation formation when it's downside, right? So you'll go on a downside, you'll get this, but it's okay. So that's a good rule for me to give you right now. Continuation formation only specific to the downside. You get downside price action, you get price convergence, and then you get the continuation to the downside. Okay, now as an upside, that is a reversal formation. Okay, let me go ahead and pass you the rising wedge notes right over here for you to take into consideration. Go ahead and take a screenshot of that team as soon as you're able, and we should move on here, right? So we've been answering a lot of these questions here, right? So that we actually pulled back just a little too much. So ascending triangle, team. Ascending triangle is not the same as rising. Ascending is a perfectly horizontal top. This is an upside type of formation. Now, in specific to when you have this was very technical. I took the top side of this candle and we started a downtrend before we started accumulating like this. If this formation were printed, let's just see. Let me give you a note here. This is technical because of this downside here, meaning that this would imply that this was built during a downside, meaning that there's a risk that this can fail for a downside, because that's the rule here. If this formation is built during the upside, however, that means that this is a continuation formation for the upside. If it's built during a downtrend, right, and then you have your then you have your right angle triangle down here, your flat top with convergence in price here, this is a continuation for the downside. So this is why it became very, very tricky at this point, because sometimes people take a look at these nuances, man. It becomes a real deal here, right? So this, in all technicalities, has a larger upside than it did the short bottom here, and it continued to the upside. The way I took this, and just like any other triangle, you have your take profit 1 from the breakout of the candle, take profit 2 at the center of the triangle, and take profit 3 from the back of the triangle, right? Those are your 3 implied price objectives. And it looks like it reached very nicely right there. So let's go ahead and zoom in. Take a look. Right? So that is how to trade your ascending triangle. Go ahead and take a screenshot of this team, and we shall continue. It's getting a little bit late for our East Coasters, just so that we know and keep that in our minds and hearts. All right, so this is honestly this is for the COSM asset, right? So this was me explaining either this goes to an upside based on 2 different formations, right, known as a buy formation, or this is something that I've actually created myself, team. I haven't heard anybody speak about it, and it doesn't really exist in the trade. This is not something that is in the trading playbook or anything. This is just me applying a thesis that I've known to actually increase the probabilities of price action. Okay, so what I'm looking at here is a bullish buy formation breakout. Now, there was a serious bad catalyst right around here that actually invalidated everything. Now, why would this be a bullish buy formation? Well, because we have a huge downside, right? You just can't see it here, but we have a massive, massive, massive downside, and we started building this triangle, right? So that would imply that we are potentially going to reverse. Right? So in this case, right at the tail end of the triangle, which is, we started breaking out at the 95%. I don't like that. Write this in your notes. Your triangle formations of any kind will usually realize its breakout or breakdown at 65 to 75% the apex of the triangle, this being your apex, the apex. Okay, so please know that that is the way that works. Okay, so now that we know that, as we start approaching into that 90 to 95, it doesn't make it invalid. It just the probabilities become a little less, right? Because there was potentially something that someone was missing fundamentally or something, right? So now this is what I will tell you is that I know that this is saying buy formation, but in reality, this was a bullish try formation, right? Because we definitely have a falling wedge here, right? That triangle is actually experiencing its breakout too. We have an inverse head and shoulders as the second formation, layered within a larger time frame bullish formation. So in reality, this was meant to be titled a bullish tri-formation breakout. And this will give you several targets to the upside, both to the immediate short term and to the macro time. Okay, so that is the way to trade this type of formation. Okay, you will hear me mention this a lot. I use this a lot with a lot of success too. Now, this is your descending triangle properties. Go ahead and take a screenshot of that so we can go ahead and move forward. And please remember that this video is the last live stream that I will give from the Masters course, and I will continue this in the dark with them for the next until 17 weeks. Now, here is your failed. This is your failed ascending triangle. Why would it be failed, right? Well, this is a great point for us to see that it would be a continuation to the upside. But why did it fail? This is kind of known as a liquidity trap, right? You have a massive amount of sellers stacking right at this point here, and that point. Why is it so particular there? Because there is what's known as a gap fill in price action. This wick right over here. I'm going to draw it for you. This wick right over here and ends right there. Now this wick right over here ends right there. So you can see that there is a gap in price. These gaps, these open areas, present a resistance or support depending on where price action is going. So this prevented this formation from continuing there. So we got the gap fill. We got it. We filled it right to the top of the gap. And then you had a great deal of sellers open short right there. It's a typical trick. It's a typical trick. Right? You don't want to fall for those tricks. You want to make sure that you can identify these areas here. And guess what? You're going to learn what Fibonacci extensions are or retracements are. And it just so happened that this target here happened to be very close to one of my favorite ones. I like the 382, 618, the 272. It's not to say that the 786 or the 236 don't have hit rates. They do. But I tend to favor those three. In sequence, the 618 being number 1, 272 being number 2, and the 382 being number 3. And it hit my second favorite. That was the confluence here. And confluent to the gap. So this is how we were able to identify that the play was not going to continue to the upside. Okay? So, know for a fact. And also look at the breakdown here. The breakout, sorry. This was technically the first one in the validation of support, but we reclaimed the inside and continued. This would be technically 75% to the apex of your triangle. So playing the rules very nicely. Now, because it failed and went to the downside, guess what? We can still use the rules here. We can still use the rules. Your center of the triangle being the target, being one of the targets. Your breakdown is a little too small right here, right? So we're not going to use that. And also the back of the triangle, this being your price objective. So you can see here that we used it and it worked out pretty damn nicely. Sorry. There we go. And it worked out pretty damn nicely, right? Look at the supports here. So that is your failed formation using price action. We're using the wicks of the candles here, right? Against a formation theory. So you see how we're cascading, right? We're using the layers of the weeks. This is the, let me just give you this, team, so you can go ahead and take into consideration, right? Take a screenshot of that, and that's how you can trade the trap, or identify it at least. All right, so let's go ahead and now move on to the very last slide here, and this is the drill. This is the assignment and drill. We're going to go ahead and end with this, right? So let's just say that I'm missing two formations from the triangle family. That's why I asked you to pay very close attention to the triangles. I am missing two of them from the triangle family. Identify which ones I'm missing and state its properties and rules of trading. Hint: the missing formation is mentioned in this formation. If you can get the clue there, it's okay. I know it sounds confusing, but if you can get it, then you'll identify it. But that's a very distant clue. Just know that you will be able to identify it if you just study what formation, what the triangle family has. And I don't think you'll be able to find them searching triangle family, by the way. Okay? Remember, a descending triangle, otherwise known in mathematical terms as a right-angled triangle, gives you a variation of the same thing. So know that this is going to be a little bit of a challenge here for you. Okay? Identify the two missing formations. Now, number two, identify two formations in two different time frames of any asset you choose. Okay? Just one asset, two different time frames, and two formations within that time frame. Okay, within those two different time frames. These are that have to be unmentioned in this lecture. Okay, so make sure that they are not mentioned here. Use completely other formations. Google is there for you, and also a free chat GPT is there for you too. Okay, so go ahead and post your drills into the teacher's lounge, and we should be good to go. So now I understand that we are a little bit over our time here. I mean, by a good amount. So I really appreciate the team for sticking around for this lesson, as this is critical for our system building. Okay, so now I know that we could actually present some questions. Just know also that I have around 12 or 13 minutes to make these questions happen here, because there is also a continuation to this live stream. Not for the students, it's actually for the market prep for tomorrow. Okay, so yes, this is going to happen at 8:45, and I definitely have to be there, or 8:55, and I definitely have to be there for that, team. So let's go ahead and refer to these questions here. Christina saying, if you were going long on that descending channel chart, would it make sense to enter at the test of the support number 2 instead of where you mentioned entering, or is that riskier because it could fail those following tests of the resistance? On the test number 2, that is a risk, because you need at least 2 tests of the support to validate the formation in general. But if you were testing test number 3 support, then there could be a play there. And then that means that you trade the upside, take profit at a certain point, and then you could actually break out at test number 4 or 5, get the retracement to validate your support into a resistance. You enter that validation and you continue on the second play. Right, so please remember, team, that the class is dismissed. This is for questions right now for a quick little 12, 13 minutes, and then we shall continue. US1 saying, can you repeat the triangle formation? 65 to 75% of the apex. All triangles, right? So we spoke of here of the right angle triangle or descending triangle, right? So otherwise, no, just if you are still here, you'll understand what I say later. I hope you catch it, okay? So yes, if we're looking at triangles like this, right, any type of triangle, remember the rising wedge that we looked at, right? So we have that rising wedge that had this upside like this. So the apex is located here, right? Usually when you reach that point of 65 to 75%, that's usually where this thing tends to start either breaking down or breaking out. Right around the 65 to 75% to the apex of the triangle is where 74% probabilities will lead for a breakdown or breakout. Senor Pennington, you know it. Caroline, you are very welcome. Big G, you are very welcome. Tony Spock is saying brain is fried. Now imagine this. Imagine this. Now you got to think to yourself, when I used to do the ticker pickers, right? Somebody would be like, Arca, 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 right? They come in the chat and say, hey, can you look at this ticker? Can you look at that ticker? Can you look at this ticker and that one? So everything that I'm mentioning to you, and plus the 17 weeks that I'm going to go over with you, I have to magically make that happen within 30 seconds, right? So, and for me to be able to tell you like, okay, well, there's a likely downside here or upside. And then all through the night, I'm like, man, I hope I, said it. I hope I called it right on at least a few of those. And usually, man, the Ed Princeton, ya sabes, mi amigo, good to see you, my brother. Joe H, my bro. And just know that I also worry, right? Because I'm expressing to you my opinions over in an entertainment fashion, right? What the market could do leading into that next day. So I do worry, but oftentimes I do hear that, Arca, you called it dead on the money, right? And I'm like, I did? And they're like, yeah, it was for ticker, whatever. And I'm like, dude, I don't remember what I said, but oh, thank goodness. And then they'll start reminding me, right? I often forget what I talk about because I cover so many tickers on a daily basis, right? And as I will tell you, team, that's it's critical for you to observe price action, for you to study the charts as much as you can. Now that you know that there is structure within chaos, you are able to identify higher probability moves. Right? And this is we're one by one, a master student, we're going to stop Twitter X Spaces. I'm just kidding, right? I'm just trying to prevent the creation of new communities that all hold. I don't want you guys holding. And I'm going to say it clean and I'm going to say it clear here. I don't care about your business as a customer. I care about your trading and your portfolio and your overall gain for your family. If you learn this and really take everything into the deepest consideration, and you end up so good that you end up better than Arca and better than everyone that he's around, and you never come back to me, I will consider that a success. Because I don't want you to rely on these notification platforms where they send you a ping and it's like, hey, we're all going to long right here. I don't care about any of that. I want you to become self-sufficient, whether it means that I'm going to lose you forever or not. That's my gamble. And I hope that I do lose you forever, because that means that I know you found it. And that means that you are going to continue on your own path and continue to share this maybe with your family members. Hopefully. But know that that is what I want. That is what I truly want from you. I want your success. Sebastian, I'm in the Arca. I'm in the ArcU. You can join us in there too, buddy. So thanks, Arca. A boatload of knowledge you have, my brother. I know, man. I know, but I really want to share it with you. Another great day, another great class, another great trade, another great experience. Options, I love you, dude. Thank you so much. Options saying sometimes I ghost Arca, lol, and sometimes he ghosts me, lol. It only means he is successful. That's it, my dude. I don't mean to, man. There's a lot of noise happening, right? So Zenit is saying, I'm going to make it a goal to be better than you, Arca, but I will always come back to the streams. My dude, that is my ultimate goal. I hope that I can find talent that really surpasses everyone else, man. I hope that I can share it. A lot of people don't share their knowledge, man. It only because I share with you the secrets of the market does not mean you're going to trade the secrets of the market like me. It means that you're going to trade it like you do. And I will never be able to trade it like you do either. So I'm hoping that I can build an army that can just succeed on their own wherever they go. Or you can be solo artists, man. You can be whatever you want in the markets. I just want you to be self-sufficient. I want you to know how to identify this for yourselves. Never to an alert system. None of that. None of that. Yes, Bree. Have a good night. Thank you so much. I'm sorry. I hope I didn't hold you back. Sometimes people say something to me. I'm just over here like, I'll just like postpone the comments and oh my goodness. But you get me. Have a good night. Be safe. Be well. Thank you so much for sticking around. Thank you as well. Aiden saying, catch you later, Arca. Got to finish some homework. I will see you in the morning. Text me if anything, buddy. Please be safe. And let me know if you need help with anything at all. Galvin saying, appreciate the lesson and the delivery. Many blessings and blessings to you and your brother Galvin. I hope we see your brother in the Arc University as well. Tony Spock saying thanks, Arca. Great class. A little overwhelmed, and hope it gets easier to remember to identify. Right, both either or all these formations as we learn more. You're awesome, my brother. I will tell you right now that all it takes is a little spark of imagination, and definitely you will get it. That's all it takes. Jim saying, so just to clarify, once you hit 65-75% of the apex, it will start to either break out or break down. Yeah, depending on the type of triangle, of course. That's typically the area where you want to look at. Now, remember that if it starts reaching that 80 to 90, 95%, that usually kind of leads to invalidation of the play. Right? You don't want things to reach that low. You don't want, and then also sometimes when it starts reaching that low, you can pull the fingers off the trigger because it's probably just going to consolidate, or it's not going to do what you want it to do. Right, team? So, guys, I literally have about 1 or 2 minutes left. I got to make sure to make my way into the Arca Bulls so we can go ahead and get the market prep ready. So please know that I am not avoiding your questions. Please post them into the teacher's lounge of track 4, and I will answer them there. So Joe H saying, Arca, you're the best thing that ever happened for retail. Dude, I certainly hope that I can be at least some type of beacon here to help retail in any way that I can. That's all I want to do, man. That's all I've ever wanted to do. But man, I mean, what is this? That would mark around 160 to 170 total students, dude. So this is I got to tell you, it's incredibly time consuming and very tough. Christina, have a good night, and thank you so much. I wish you a good rest as well. David saying, good night, brother. Thanks for being a great instructor, but you seem very humble, a great friend, indication. Much love, my brother. Good night. I really try to be, man. I try to be a loyal friend to to the people closest to me. And I really do believe in putting out what you want to be given to, or how you want to be treated. Man, I have gone through too much tribulation to be a nefarious person, man. All I want to do here, man, all I want to do here is trade so that I can provide a roof over my kids' heads and over my wife's head and a dinner plate. That's all I want, man. That's really all I want. I don't care to be rich. I don't care to have Lambos. I care to have consistency, and I care to have stability. The 1 million view flex, man. Zen is saying, see you tomorrow, and hopefully, right? So thank you a lot for doing this class. I've already learned a lot, but you're the man, dude. Thank you, Zen, and you are much appreciated, my brother. Tony saying, good night, Arca. We are fortunate to have you, and so is everyone online on all platforms who follow you. I appreciate those kind words, Tony. You take care. Have a good night. And David saying, likewise, good night, my brother. Okay, team. So let's go ahead and close out the stream. I need to get over to the market prep. Superman, right? So know that I'm going to be streaming right in the market prep at 8:55 p.m. team. So if you are not, get your sleep, right? But I'll see you here in around 20 minutes. Okay. So be safe, right? And, trade wisely and make sure to keep that risk management in play. All right, team. I love you all. Options. I'm going to catch you in there, my dude, if you are not in the east side, right? In the east coast. But, love you guys. Please be careful, and we'll speak so soon. We'll speak soon. Is GTI a lost cause? Base Oamen, come by in 20 minutes. I will talk to you about that. Okay? Appreciate you guys. Take care. Be well. And we will speak another time, literally in 20 minutes. Adios, team.